Investing is less about seeking returns than it is about controlling risk. Let's talk for a minute about the risks
Yeah.
of investing in each of these funds. What sort of terrible thing could happen that investors could be exposed to? Let's say we go through a 2008 style scenario or something like that. What kind of risk are we talking about running when investing in these funds?
Yeah, it's a good question. And I'll just take a quick step back, and then I'll answer it maybe more directly. But what I think about it is there's lots of volatility, right? It seems like over the last since COVID, you could say, we're facing an unprecedented kind of type of volatility we've never experienced before every week, right? And there's lots of things, right? Nobody predicted COVID to happen. Nobody predicted the government to say, tell renters they didn't have to pay rent, right? As an example, right? Nobody, you know, predicted, interest rates to go up by 5.25% in just a few months, right? Even the predictions people had, that we've had a lot more extreme situations than what were sort of expected, and so I just think about it whenever there's major times of volatility. There's going to be, it's going to affect, all asset classes to different degrees. And I believe housing, affordable housing for working families is going to be in great demand. It's an essential need. And I think it's going to have less volatility than most other places you can invest. And then when you look at, if you narrow down to say investing in housing is one of the safer, more secure, stable ways or places to invest, even in recessionary environments, even in uh, uh, times of volatility. Any asset class, any type of investment you make, my belief is that the best managers, the best leadership teams are going to perform better than most companies. And it's in the times of stress and volatility where the manager you invest in matters most. And in times of volatility, in times of COVID, we saw lots of managers out there go into forbearances on their mortgages, stop paying mortgage payments, kind of hide under the tables and not know what to do. And we generated the same kind of double digit returns through that time of volatility, and increased the frequency of our communication and transparency and clarity to our investors by doing webinars twice a week during that time, telling how we're doing with rent collection, telling how we're doing with interest payment collections from our borrowers, et cetera. And so I just think when you're thinking about making investment, you need to trust in the management team, the leadership team. I'm not saying just the CEO or the founder, but who's the leadership team making decisions? Are you confident they're going to make strong, positive decisions, make the right decisions in times of stress and volatility? They built a business that and done the hard work before the distress comes to be able to weather those times of volatility. I often lead on my first slide about myself as Inc. 5000 now, 13 years in a row. And I'm more proud that we've been on the list 13 times than I am that we've been on the list, because you're more likely, once you've made that list, to be out of business in 5 years than to ever make the list again, because generating consistent returns, boring even returns, as you said, Jim, year over year over year, is hard. And we've built that discipline in doing so. So I would just say, that those are really important things to think about, because there's other fund managers out there investing in real estate. There's other syndication opportunities. But who do you feel most confident is going to be able to weather times of volatility and be able to look that management team straight in the eye and be confident in the people you're investing in? But specifically to our, to the risks and what you're saying, what could happen? I think when you look at, hey, if we go into a heavy recession, as the example, we go into a 2008 scenario again. First and foremost, I think people get confused. The 2008 scenario was quite different than today in terms of a lot of the fundamentals in the marketplace. Not likely to have a repeat of 2008, even though that's what people think about. The next form of volatility is likely going to look quite different. But the way I think about it, the biggest challenge that could happen for investors is, property values drop a ton. Nobody's buying real estate, and we become less liquid in that there's not as much opportunity to sell properties, or loans aren't paying off as fast because sort of the capital markets world stops. But fundamentally, what we're invested in is income producing housing. And I think the fundamentals of people still needing a place to live, still having occupancy, still being able to generate consistent returns and distributions are going to be there even in times of extreme volatility. But maybe we're less liquid. But in that environment, if sort of the world is falling apart and there's lots of distress, we're in a major recession, I'm very confident we're going to weather that environment better than most other asset classes, and certainly better than most other managers in our asset class.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.